Macy's has been doing pretty well recently. They've done a lot of initiatives ranging from putting in, kind of lower price merchandise in their stores through some outlet models. They've experimented with a lot of different things. They've had some new management in place. So it doesn't surprise me, but it's also working from a lower comp as well. I think that we really do need to wait for the longer term trend, see how it does in another year or so. And then I think we can say whether they're out of the woods yet or not.
Sucharita, let's talk about the government retail sales. Up, as Steve mentioned, better than expected, up 0.5%. Let's get to some of the questions he just raised, and that is, how flush is the consumer feeling right now? What are your insights on this?
Well, in the short term, definitely flush because unemployment is low. You have a tight jobs market. You have the tax cuts working, all that are in favor of the customer. So it's not surprising to see that $500 billion spent in July that we did. The bigger issue, though, Becky, is that we are in a situation where for the last several decades, we haven't seen average incomes, inflation adjusted, really increase. So even though we may have a great year-over-year number between 2017 and 2018, I'm not confident that by 2020 or 2021 we're going to see the same pace of growth, and that's the bigger challenge. Is that how do we get younger millennial customers to a higher income level, and ultimately that's what's going to drive spending over time.
If that's the question you still have, when do you think you'll get answers on that? When will you have more clarity?
I think probably in another, honestly, 12 to 18 months. It's still too early to tell because we have so many unusual things that are happening in 2018. We have the tax issue. We also have this unknown of what's going to happen with tariffs, if they affect consumer goods or not. At the moment, they don't seem to be huge in consumer goods, maybe some appliances and some hard goods that are coming from China. But for the most part, the real effect would come if it ultimately hits soft goods and the apparel and home goods part of the world. So that we don't have evidence yet that it's going to have a major impact. But really, I think that to get a sense of what's happening with the customer, and is this a long-term trend or is this just an enthusiastic short-term burst in demand, I think it's going to be a while before we know.
We've been looking at gasoline prices, and on a national average, you're still talking about below $3 a gallon, but you are talking about a huge increase from what we saw a year ago at this time. What does that mean for the consumer? Is it at a point where it actually puts constraints on things? Does it offset some of the taxes, or the tax returns, I should say? Or is this something that you're just not worried about, at least when you look at it from a historical perspective?
Well, gas stations have been they've actually been the sector within retail that's grown the fastest. It's actually grown faster than even electronic retailers, the e-commerce retailers that we were talking about earlier. So that's definitely something to keep an eye on. I think that some of that has just been the momentum of lower prices over the last several months. But as the prices go up, I do expect a bit of retrenching, and there's no way that the double-digit year-over-year growth in gas stations is going to continue. All retail is cyclical, and I really hesitate to get too excited about great numbers for very long because ultimately consumers pull back, and there's a fixed pie of a few $1 trillion, and it's really which sectors grow and which sectors lose at the expense of those that grow.